Hi, Shae Russell here, editor at Fat Tail Media, and wow, what a market we are in. I'm not trying to say that with too much glee. It's more of a case of, honestly, every morning I wake up and I'm seeing new information, a new way that the stock market's responding, and at the same time I'm watching the rule book of technical and fundamental analysis get torn up and thrown out the window. Because, if the four most expensive words in history, this is different, or this time it's different, this really is. We are witnessing unprecedented market action. Just this morning, I woke up and I found out that the Dow Jones was below 20,000 points for the first time in years. The oil price had sunk to an 18-year low, and that the Aussie dollar had been kicked down to 57 cents. And then that adds to the sea of red and the panic that I'm seeing investors as they sell out of anything that isn't cash. I'm not surprised that investors are fleeing out of the market. The thing is, there's only so long that we can be scared of this. At some point, we've got to start processing the information and looking for opportunities. And one of the really frustrating things for me at the moment is that all we're getting is bombarded with numbers of what's going down. And a lot of the analysis I'm getting isn't actually useful because it's not pointing out where we should be looking. So that's why I'm here. One of the things that I would really like to draw your attention to is gold. Now, obviously, it's no secret that I'm the raging gold bull here at Fat Tail Media, but there is a good reason why. And that is because we are in the middle of a gold bull market. Even though the US dollar gold price for gold fell down to below 1,500 last night, so it got down to around 1,490 US dollars. That doesn't mean the gold bull market is over. Anything but. If anything, we could be midway the gold bull market and the best days are ahead for the metal. Now, I know this because of my gold windows theory. My gold windows theory has simply looked at the past two gold bull markets and just broken it up into three different chunks of market behavior, what they meant, and what that meant for investors. So basically, the three chunks are pretty simple. It's currency devaluation, the investor phase, and the mania phase. And I'll get to the mania phase in a minute because that's the most important part. So simply put, the currency devaluation phase is very easy to understand. That's where all currencies weaken against the US dollar value of gold. And we've pretty much seen that. Everything bar the Swiss franc, the US dollar, and the Chinese yuan have fallen around the world. The Aussie dollar gold price is sitting at $2,580 at the moment. That's an all-time high. Same for Japanese yen, euro, pound, sterling, everything. Major currencies are at an all-time high as measured in gold. Now, the investor phase is also pretty simple, and it says what it is. That's where investors pile into the yellow metal. Now, that's not only through physical buying, but that's also through things like gold-backed ETFs and derivatives. So we just need to look at gold-backed ETFs, for example. If we go back to February, they had one of their largest inflows of gold under management in 6 months. So that suggests more investors are looking to paper trade the gold price. We know that central banks have been net buyers of gold for the past couple of years. And also too, if you start speaking to bullion dealers here in Australia, they will tell you that they are seeing unprecedented demand for yellow and gold. They're seeing queues out the door. They're having to let investors know that there's going to be significant lead time on getting them their precious metals. Now let's make this clear. This isn't a shortage of silver and gold. We're fortunate here in Australia, we've got plenty of it. It's that the machines, our machines, can't keep up with demand. Now that is a remarkable thing. So what do we do with that information? What this means, if we're starting to see investors flock into the precious metal, the physical precious metal, they're queuing up to buy it from a store, even in these times when we're all supposed to be self-isolating, people are scared and they're moving into the one thing that tends to do very well in economic uncertainty, and that's gold. Now, we've seen from the past two bull markets that gold can do some crazy things. So, for example, in the 1970s, gold was trading at $33 per ounce, or in US dollars, in 1971. Yet by the end of the decade, it hit $800 per ounce. I guarantee you there is not one single person in 1972 that would forecast that had happened. There's a similar thing in 2001. The US dollar gold price was sitting at around $200 per ounce. Yet by 2011, the gold price had rallied all the way to $1,900 US per ounce. Again, back in the early 2000s, after the price of gold had been depressed for nearly 2 decades, there is nobody that could have forecast such a rally at that point in time. And I believe we're witnessing that again. Not only has the physical price of US dollar gold sold off, but that's okay. It's simply taking a breather before we start to see unimaginable things potentially repeat themselves. Now, take this for example. From 2002 to 2011, the gold price rose 9.5 times. Could you imagine that happening now? It doesn't sound plausible, but yet we know that gold does unprecedented things against uncertain backdrops. And that's what we're seeing now. One of the things though that does happen in gold bull markets is that it tends to take gold stocks with it. Now, obviously not all gold stocks rise with gold bull markets, but there are some incredible companies that will tag along for this gold bull market. We just need to look at the Aussie dollar gold price as a classic example of why I believe gold stocks are poised very well to benefit from this underlying gold bull market. So let's put this in perspective right now. The Aussie dollar gold price is sitting around $2,580 per ounce. Yet, the average all-in sustaining cost for the top 14 gold producers here in Australia is under $1,300. So just let that sit in your mind for a minute. It costs them $1,300 an ounce to get it out. Yet, they're selling it for over $2.5 grand. That's over $1,000 in margin per ounce. What are they doing with it? They're banking it. They are sitting on cash. There's a couple of companies that have more than $1 billion in cash on their books right now, and there's several other Aussie gold miners that have a couple of $100 million in cash on their books right now. That tells us that even though gold miners have been savagely sold off over the past couple of weeks, they are cashed up. And I can tell you right now, in a market uncertainty like this, cash is king. So the fact that they already have good cash piles means that they might be able to weather this economic uncertainty quite well. But not only that, they are mining a metal quite cheaply and selling it at a high cost. And that trend looks set to continue. So once investors catch on to how cashed up some of these gold miners are, some of these gold mining stocks are going to see incredible double-digit price gains. Just earlier in this week, it did happen. A couple of major gold producers saw their share price rally, and it's because savvy investors, while they knew the rest of the market was selling off, they knew that there are cashed up gold stocks here. Now that's exactly where I come in, and this is what I do. Not only am I a raging gold bull, but I also look for stocks that are likely to benefit from a rising gold price. Now, obviously not all stocks are going to go up, but I do know that if we look hard enough, there are some incredible opportunities. And what we're witnessing right now could be a wonderful mismatch of high quality explorers that have gold in the ground but no cash to get it out, and cashed up gold producers that need the gold but don't want to do the hard work themselves. So that's what I'm looking for. In fact, just today I was putting a note out to my subscribers at Hard Money Trader and letting them know that this disparity is going to work in our favor and that we were well positioned for when investors do decide to come back into the market. Now, we don't know when the market sell-off is going to end. I'm not going to pretend I can call the bottom of a market, but I do know that these opportunities are going to present themselves and that early investors would do well to come over and have a look at some of the gold stock opportunities and just get ready for when this gold bull market kicks back off again. That's all from me. You'll hear from me later on. Thanks for watching.